So let's now analyze how to fill in information and what all information is required to be filled in section 2 onwards, which is the more technical part. So section 2 specifically talks about the financial details of the company, the general financial details like paid up capital, your P&L, your reserves, your sales and purchase, etc. So the paid up share capital is divided into three categories: equity share capital, participating preference shares, and non-participating preference shares. So participating and non-participating both are the types of preference shares, but there is a reason why these are segregated here. So to give a distinction between participating and non-participating preference shares, so participating are generally those preference shares which have rights into the surplus dividend or the surplus profit, residual profit after equity has their own share, or both of them. So which means they participate in the surplus profits and surplus reserves. So those are the participating preference shares. Non-participating preference shares do not have either of these rights, any of these rights. So they are categorized differently. So we'll understand more once we move ahead. Then once we mention about the paid up share capital, so like Sneha mentioned in the class of shares discussion also, that if there is only one class, system allows you to enter the face value, but if there are more than one classes, face value is not entered. So if it is only one class, we enter in the face value, we enter the number of shares, it automatically calculates your paid up capital. But where there are more than one classes, after entering the number of shares, we can put in the total paid up capital manually also. Then details about non-resident shareholding. Here we have to give that portion of the shareholding which is held by the non-residents category wise, like non-resident individuals, body corporates, other associations, etc. Third is the profit and loss account. So here we have to mention about profit and loss from the PL, before tax, after tax, dividend if any declared by the company, interim as well as final, and tax on dividend if any. So nowadays generally there is no tax deducted by the company. Earlier it was dividend distribution tax which was deducted in the hands of the company. So this is not much relevant as of now, but still it is covered in case there is still any tax applicable. Next is the reserves and surplus. I think we've been queries on the reserves and surplus also. So reserves and surplus here means majorly cash reserves. In case there are any reserves which are not cash reserves, for example, revaluation reserves, we have to exclude those. And the P&L balance. So this reserves and surplus will include the P&L balance also, but we need to mention P&L balance separately, from the reserves also. Like it says, profit and loss account balance out of the reserves and surplus. So this does not mean that we'll consider reserves and surplus excluding profit and loss. We'll have to consider profit and loss also while we mention reserves and surplus figures. So system will auto calculate your net worth, so which will be your paid up capital plus reserves and surplus, right? And then it asks about sales and purchase details. So sales mean the entire revenue which is coming up in your profit and loss will be considered as sales. This may include other income also, your revenue from operations plus your other income, and divided into domestic as well as export. Similarly, purchase figure. So purchase also we have to consider from the profit and loss accounts. Total expenses mentioned in your profit and loss account, excluding depreciation, will be considered as domestic purchase, which means the cash expenses. Then imports, if any, will be mentioned separately. Now, very important point here is that while we talk about sale and purchase from the profit and loss account, we also need to include capital purchases, if any. So, for example, if we've purchased any anything on the capex side, like say building machinery, for example, so that has to be considered here while we mention the figure of domestic purchase or imports. So in both the cases, even if it is domestic purchase, the number of employees on payroll also needs to be mentioned. While this is not very related to the foreign liabilities and assets, but this information is also asked here. Perhaps RBI wants to know how the employee scale in the company, FDA funded companies, basically. So
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000+ laws and 24,000+ compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.